Now, we're always interested, and the question is always asked, what about houses and units? So basically, that's pretty much what's happening with the housing market. Is the unit market mirroring that sort of trend, or what's happening?
It's fairly similar across the unit market. Again, it's those areas closer to the city that tend to be the ones that are performing best. The eastern suburbs, the regions right in the middle of the city. Again, they're the ones doing best. I guess when you go to some of those outer areas, if you're looking at Onkaparinga or Salisbury or something like that, what you're paying for a unit, there's not a huge differential between the prices of a brand new unit out in those areas and a brand new house. So it's probably not as appealing to get into a unit into some of those outer, more affordable markets. Whereas in the city, there can be quite a differential between the price of a house. So, for example, someone wants to live, say, in Norwood, they're probably looking at $800,000-900,000 as a minimum for a house, but they might be able to get in there for $350,000-400,000 for a unit. So that's why they remain very attractive from the unit market, because you can live in one of these premium markets at a much lower price.
Cameron, I noticed with regard to the change in unit prices, the leader there was Campbelltown. Now that's a wild card, because the others are Unley, Burnside, Holdfast Bay, the city, Norwood, Payneham, St Peters. That is really odd. Any explanation for Campbelltown?
It's a bit of a hard one to explain. I would probably put it down to a fairly minimal level of actual transactions in the unit market, and perhaps some new stock coming onto the market there, which has affected the median price there.
So the major amount of new developments happening in the Campbelltown Council area would then skew the numbers in that period.
Exactly. When you've got a small sample size, and last year maybe the stock that transacted was quite a bit older and more affordable, then you've got new unit developments coming online at a higher price, better quality development, and more sales of those happening. You can see that the prices can get skewed, and that's one of the weaknesses of a median price. If there's a compositional shift in what's transacting in the market, that can be reflected in the median price.
Cameron, this is my favourite one, and it's a contentious one, and it comes up all the time. Adelaide's prices, the most affordable of any mainland capital city. Talk to me about that. That's gold. That's great news.
That's great for Adelaide. Exactly right. You're looking at Adelaide house prices, you're about 35% lower than Sydney, which is the most expensive market on the mainland. So again, very good selling point for the Adelaide market. You can still get in here quite affordable. I think if you could pull some people down from Sydney and show them the quality of housing you get and what prices, they'd just be absolutely astonished, because in Sydney you probably don't get anything within 10-15 k's of the city for the Adelaide median price. So it is a great feature for Adelaide, and that really needs to be sold.
Awesome. Yeah, well that's a safeguard against any price dropping. So realistically, that puts us in an awesome position for growth.
Exactly right.
Yeah.
I mean, affordability constraints are constantly commented on, especially now that we don't have the first homeowners grant boost. We don't have the interest rates at their lowest levels in 49 years. Affordability is becoming a big issue again, but it's not such a big issue in Adelaide because prices are so much more affordable here than they are in, say, Sydney, Melbourne, Darwin or Canberra.
Now the big one there, I noticed Perth is now right in the middle at 485,000. There was a stage back in the boom that they actually overtook Sydney for a few months.
That's exactly right. So Perth prices have really softened quite a bit. The Perth market, if you actually have a look at the long-term growth, at one point Perth property values were growing on an annual basis of almost 50%. So
extraordinary.
But it's extraordinary, but just not sustainable at all. So what we're seeing in Perth at the moment is really the correction that it had to have. It's not nice for the people there, but there's a good reason why Sydney is the most expensive market. It's the most populated capital city we have. It's where the bulk of the jobs are. So it makes sense that realistically you probably go Sydney, Melbourne, then Canberra, Brisbane, that sort of thing. So it did get a little bit out of whack what was happening in Perth, and now we're seeing a correction in that market.
Now notice the unit median prices almost reflect the housing ones. Couple of different jockeying of positions there, where Melbourne goes to the second least affordable next to Sydney, versus on the housing Canberra and Darwin. Any explanation for that, or is it just the way people are living?
It's just the way people are living, and Melbourne's seen such a huge influx of inner city high quality apartments over recent years. When you look to Melbourne, areas like Docklands and South Bank, there's been a huge amount of new development in those regions. and a lot of those new developments are targeted at that premium end of the market. So it's really had an effect of boosting those prices for unit accommodation in the Melbourne market.
Cameron, the one that's really close to our heart is the top end market. We've had an awesome run with big property sales here in Adelaide, and even, some of the auctions we've had have gone way over reserve, and it's been absolutely fabulous. But in terms of the top end market, from what you can see in these stats, that is the best part of the market across the whole of the country. Is that right?
That's right. It has been over the last 12 months, but what we're finding now is that there's actually an easing occurring in that top end market. Now, we're not really 100% sure what this is, but I think the uncertainty surrounding the election that we've had over the last couple of months and leading into the election has seen some of those higher net worth individuals just hold off on their decision to go and buy high quality properties. We did have a little bit of volatility on the share market back in June and July as well, so that probably has impacted that premium market a little bit. But over time, we've seen that the premium market has continued to be the best performer. You may equate it to a higher risk share. When times are good, it does very well. When times aren't so good, back in 2007, we saw that 2008 rather, we saw that the premium end of the market was more heavily impacted than the more affordable ends of the market. But overall, the premium market tends to be in those inner city areas that are most desirable, and it should hold its value well. Just over the last 3 months, we've seen a little bit of an easing in the growth there, but we think that's just a minor glitch that won't last too long.
Cameron, do you think that's... I had this chat with Tim Lawless, who's one of your guys, for RP Data, one of the head guys there, that the information, the data that you're running on at the moment is, what, 1 quarter back? Because the sales occur, and then between sale and settlement, there's probably a 2-month break, and then another month. So it's about a quarter behind? That's
right. The latest data we have at the moment is July data. So we reported at the end of last month, at the end of August, July data, and that data will actually be revised next month. So we're always a little bit behind, and that's one of the weaknesses of property data, having to rely on governments to collect a portion of that data. We need to make sure we have a decent sample size. So there is a bit of a time lag with property data.
Because what we have found out in the field, that we've anecdotally found that the top end does follow the confidence in the stock market to a large extent. It's quite extraordinary. And so that's activity at that immediate time. So the sales would come through at different times, but there seems to be a bit of a correlation between the two.
Certainly. I mean, a lot of these high net worth individuals that are going to be buying the premium property are going to have a diversified portfolio. So they're going to have investments in the stock market. They might have government bonds, or they might have a few other things. So it makes sense that the higher quality property is heavily impacted by what happens on the share market. And that's why we saw such a big fall in property values across that premium market during 2008, when the stock market fell by 55%.
Well, that last quarter of 08, I'll never forget that. That really just was bizarre. It just stopped like that.
I'm sure it did.
Yeah. I mean, mind you, the prices didn't actually, they sort of drifted a little bit, but it was just the activity, the volumes and the people out sort of making those transactions.
Exactly. Adelaide wasn't as heavily impacted as, say, Sydney. We saw, executive
slash and burn.
Yeah, executive layoffs in the banking sector and the finance sector, and to a lesser degree Perth, with the mining sector pulling back as well. We saw a lot of the premium markets there slow down. It wasn't as heavily impacted in Adelaide, but certainly we did see signs of a bit of an easing in that market.
Now, the affordable price brackets, what are you finding there?
What we're finding is the bulk of the activity is still happening at that lower end of the market, so properties priced under $500,000. The interesting thing is, what we found if we compare the second quarter of last year to the second quarter of this year, is that the proportion of sales under $500,000 has actually declined, and then all of those price points above $500,000 have seen their proportion of sales activity increase. Sales of houses over $1 million, their proportion of sales has actually doubled. So there's a lot more activity in that premium market. It's still, one of the smallest markets out there, but we have seen that the level of sales activity in that market has increased significantly, even from where it was 12 months ago.
And once again, mirrored in the unit market?
Exactly right. Obviously, units tend to be a little bit more affordable, so there is a greater volume of transactions happening at that lower end of the market, and the majority of transactions are under $500,000. But again, the premium market has seen its level of activity double from about 0.8% last year to 2% this year.